do you think that, let's say, if there were more issues with stablecoins, it could affect the short-term liquidity of Bitcoin? I believe that Bitcoin will last for sure, but the question is, do you think if another stablecoin were to break, do you think it could affect Bitcoin as well?
Short term, but it was amazing how Terra Luna explosion didn't do much for Bitcoin. It was much more resilient than most people expected. But I think the positive impact of stablecoins, why are stablecoins so important? Well, there's two reasons. One is they're going to destroy the banking system in the future. And, when we get stablecoins to be able to transact cheaply and securely, efficiently, properly regulated, then the current account in most bank accounts doesn't need to exist, certainly at the personal level. Corporate banking will have more time. So it's a big threat to banking. But going back, the banks asked for this because they prevented natural liquidity to and from crypto exchanges in the last 5 years. And by being difficult about allowing people to legitimately sending money to the crypto exchanges, the crypto solution was stablecoins. And you've been around long enough, like I have, to know that every problem in crypto is solved next year. Every problem now is solved next year, and it just happens every single time. And so, I just stopped worrying about the FUD ages ago because you just have confidence in the ecosystem to keep growing because all the fine lines keep coming in. Now, Terra Luna, people talk about 40 billion lost. Well, not really. It's a bit like saying Beyond Meat, 40 billion was lost. Well, I mean, the share price should never have been where it was in the first place. You know what I mean? It was a sort of exorbitant situation. So there's no way 40 billion real dollars went into creating Terra. And so 40 billion real dollars weren't lost. There was a $40 billion mark-to-market loss, which is not quite the same thing. It's unhelpful. Algorithmic stablecoins, I get the dream. I mean, people want decentralized dollars, so that means you can't have real dollars. But personally, I'm old-fashioned. If I want the dollar, I want real dollars.
I don't know what I want, but I can tell you one thing for sure. The governments don't want you to have a dollar which is not controlled by the US government. They do not want you to have a British pound which is not controlled by the UK government, and that goes on. The power of the government is, one of its powers is to print money. And there are a lot of negative connotations to that, saying that they debase the currency and they make you poorer by doing so. But there are cases where printing money, and I'm saying it in a good way, is a good thing. When you have an external shock, for example, COVID, and suddenly the world stops, the government giving out money is not a bad thing in the short term. They need to avert a crisis. So there are times in history where that could be good. Of course, governments cannibalize that excuse, and they can do it whenever they want, as they want, and they usually do it in a very bad way. But I'm saying that the power of the government lies also in creating currency. So that power is very hard for governments to leave it and give it to a decentralized whatever system. If you remember, Bitcoin in the beginning was considered. There were a lot of people considering it as, let's say, the internet money. We have been through that. There has been a discussion that Bitcoin is a currency. I don't believe it is. I believe it's an asset. But there's been a discussion about that. So I think stablecoins will, as you said, every problem is solved after a year. So I guess it's going to be CDBC, it's going to be regulation, it's going to be both, it's going to be something, but it's not going to be as is. So I think you're right on that, and I think we're going to see more, more institutions regulating it, check and balances being more proper, let's say. So because a lot of them do not have the check and balances one would expect. I think we know that. And coming back to your Luna thesis about real money, to me, it was 40 billion. The number is huge if you think about it. And no one even blinked. I mean, I don't remember how much Lehman was, which a bit more, but the whole world went almost to implode because of that. I think it was 40 billion of profits within the crypto system. So I had made money on Bitcoin, I had made money on Ethereum, I put a portion on Luna. Okay, tough luck, I lost. I would say the majority, because I'm sure there are a lot of people that lost money, but they were not the majority in this. So to get to your point, I think, I don't know if it was real money or not, but I think the biggest part was profits from crypto space. So if I've made 300x and I lose, I don't know, 30% of my 300 and X, I'm sad, but I didn't lose my money.
You're still happy.
You didn't. Yeah, you didn't come out and I owe a house and I know and I have things and you're starting to confiscate stuff and I can't live my life. We're not there. So I think that's a very important point. Okay, so is there something else you would like to add to our discussion?
I mean, Michael, I could go on all day and we could go off tangent, but I think the audience are probably going to get exhausted at some point. But it's just, did we talk about silver? I think there was something in our pre-discussion, we might have mentioned that. We were having a chat about gold and silver liquidity, and I said to you that Bitcoin was more liquid than silver, and we then went off and checked the numbers, didn't we? And it's surprising, isn't it?
It's surprising that Bitcoin is very, very liquid. Now, if you add all the exchanges in silver, I don't know, but at the first glance, you wouldn't expect them to be so close, at least at face value. And that was, a very interesting interesting observation, because one would say, okay, I have gold and I have silver, maybe I have a little bit of Bitcoin. And then you say, why don't we replace silver with Bitcoin? And I'm like, yeah, but the liquidity. And he says, but the liquidity is huge on Bitcoin. You don't need to worry about it. And these things are not intuitive. Even if you look at screens, the legacy stuff, which is silver has been there for ages, gold has been there for ages, you would expect them to be much more liquid. Gold is more liquid, but in terms of at face value, Bitcoin seems pretty up there.
Yeah,
pretty good.
Yeah, $40 billion a day, and I think this idea of people who think about gold versus Bitcoin, maybe they should be thinking about silver versus Bitcoin, because I think one of the reasons why silver's underperformed this cycle is because crypto stole its lunch. So a lot of the people that would be naturally drawn into the silver market if crypto didn't exist have gone to crypto. And
so the beta play on gold has been shifted to Bitcoin instead of silver, which was traditionally the way to do it.
Right.
So if you want to play a beta play on gold, you would buy silver because it would give you enhanced returns for the same view. And now suddenly that's...
And of course, silver never ever went up in risk off. It was always gold that went up in risk off, and then silver would catch up when the good times came. I mean, the classic example was March 2020, wasn't it? And silver collapsed, and the gold-silver ratio went to, 120, 125? I can't remember, something like that, only to recover. So it was a fantastic buy the dip. But the other point about gold and silver is, if you were to ask me the returns of gold and silver over the next 100 years, 500 years, I might be tempted to say the same. It could be they're going to have the same return because the gold-silver ratio mean reverts. We don't really know, but I wouldn't mind making that argument.
It will be interesting.
Yeah,
it was interesting to see.
But of course, gold gets you to the same place with more liquidity and lower volatility. So you only buy silver as a relative value trade when it's smashed to pieces.